Hello, everybody, and welcome to Looking at the Markets with David Modell. I've got a repeat guest today. He is a life coach, and he is also an active and very successful trader. His name is David Wygant, and I want you to visit his website, David Wygant. That's Wygant.com for any of your personal life coaching needs. And you could also talk to him about finance as well, even if that's not his first specialty. He's quickly becoming a masterful trader. And we've got some charts up here, and it's been some crazy moves in the markets. So we're going to talk about that. Mr. David Wygant, welcome back to Looking at the Markets, sir.
Thank you, David. It has just been insane. It's so funny. It's like you and I, and David's coached me for a long time. You and I came up with such a great, easy, God, remember we found that great, easy system, and that's your system, right? And then all of a sudden the market turned, and I sent you an email. I said, no, that's not my system. I got to go back to the 1 and 2 minute chart again, because it is just, it's crazy. And I think a lot of people, David, don't understand the implications of what is really, truly going on right now, because you see these moves and your brain goes 5 steps ahead and goes, wow, man, look at that move on the SPY. I mean, that's just so easy. I could do that. And in hindsight, yes, you can. But in reality, this thing is moving. I have never seen anything move as fast as when I watch the price tower on the SPY. I mean, it looks like rush hour in New York City.
That's a good way of putting it. And you've got market indexes moving like penny stocks now. You've got companies like Boeing moving like Bitcoin or something like that. It's total craziness. That's an interesting looking chart there. Now, that is the S&P 500 ETF SPY, SPY. And by the way, we're using trendspider.com. And I'll put a link to that in the description below the video if you want to get this awesome software here. But David, what are we looking at, and what are your thoughts?
I mean, here, look, in hindsight, when the market's not moving 1,000 miles an hour, the market is technically moving really pretty. If you look at this, right here, we look at this little candle right here. This little candle is a perfect entry candle because it's an uptrend. The downtrend is reversed, right? We now have, it's above the 50 moving average, but that candle alone is 257.31 by 256.81. So that is, what is that? 50 cents a risk, right? It's moving so fast that your brain isn't processing it as quickly. When you're in the heat of action, this is a great move. Technically, this is a beautiful move. I mean, look at it. Here we go up, and then we go up, and then we go this, and it's like a really pretty move. But look at these candles. This is a $7 candle. This is just crazy. So what I've learned, David, through this is that it's great to look at the charts at the end of the day and realize, and that's something that I'll spend a half an hour to 45 minutes at the end of each session. And what I'll do is I'll write down the markets are trading technically sound. They're just moving at the speed of sound.
Yeah.
So even though this move looked simple right here, it wasn't simple in the heat of battle.
This, by the way, it's in case people can't see it, this is a 2-minute candlestick chart. These are 2-minute candles. And so we're thinking maybe as a day trader here, intraday, but all the things we're going to talk about, they can be applied for swing traders as well, I believe. Even if these were daily, one-day candlesticks, moving averages are just math. And support and resistance still apply. Would that be accurate?
Absolutely. But the thing is, on a swing trade, if this was, you were swing trading this, you would have your entry right above there. You would be like, all right, we're above the 50 moving average again, where we've made here's a pivot, and then here's a pivot. So obviously we're in an uptrend, right? You have that time to think about it. You've got a pivot there, you got a pivot there, and now you got an opportunity, right, to have a resting bar. You got a resting bar. It's almost equal highs on both of these bars within, let's see, is it equal? 257.29, within 2 cents on a $257 stock. So you have a resting bar. The problem is, and this is something that I think a lot of people that are newer And even myself, who's been doing this 2 years, I have not earned the right to trade something this fast, because in hindsight, and if this was a daily candle, we can go and we could put our entry, 1 penny over the high of this bar, 257.32, and then the next day it went down to 256.98 and came back up. But the problem here now, David, that I'm finding is it went down to 256.98, and literally 13 seconds later, as you were still trying to measure this bar, it was already up and over that entry. It went so fast.
Yeah.
So things are moving at the speed of sound. So what I've realized, and then this is something that it's taken me, because I've never traded a bear market before, and this is all new for me, I have realized that my losses during the day come on things moving this fast, because this is too fast for anybody. A 5-minute chart is too long, and a 1-minute chart is super fast, but you're not gonna be able to react this way. This is like somebody who's been doing this for 20 years can just see it and do it and get in and give themselves more risk. So if you look at this, yes, it's a beautiful move. I mean, it's a absolute picture perfect move, and you could have captured 257.37 all the way up to, you would have captured almost $1.50, or if you even stayed in it, because really that was really pretty much support within 30 cents, you could have captured that whole move. But we know we're not going to do that. But look at this, and I want to show you something now that I've been learning, right? And I've been going through, and I would love you to be able to share with other people. I go to this stock now, okay? Yep. Which is just gold.
Yeah, this is Barrick Gold Corp. It is a gold company, very famous, very well known, plenty of volume. Again, 2-minute candlestick chart and some very interesting price action. What are we looking at?
Okay. Now look at the difference, okay? The difference here allows you to make moves that are, it's not moving as fast. It's not moving 100 miles an hour. It's moving, look, here it is. It bounced off of what? It bounced off of a trend line down here. Okay. Obviously, when you have a candle that big, right? And that candle, and this is what's really interesting, David, and this is why I've been trading these stocks I just started trading these stocks this week, and I've been just really doing much better with it. You have this giant candle. Now, a giant candle like that on the SPY is $3. So your risk is going to be $3. A giant candle on Barrick Gold in 2 minutes is $18.94 by 8 is 23 cents. So you have 23 cents of risk compared to the SPY when you have $3 worth of risk. And look where you went from here. You went all the way up here. You literally made, you literally could have taken it all the way up here to another pivot point, to the pivot. Here's, pivot points, which is what I use, right? You can literally take it to the pivot point, and when you're looking at it, you've got 93 roughly to 54. You've got almost 60 cents of upside right then and there. But you have time to react because it's not moving 1,000 miles an hour.
Okay.
You actually can get in. You can get in a penny above this because it dipped back down again to 86 before it went above 95, and it didn't do it in 1 second. Okay. And it's something that I'm really starting to see and understand and learn, because I feel, David, that the lure of the Boeings and the SPYs during this time, you think to yourself, man, it's like takes your breath away. I could buy a new Tesla. One move, the SPY went up 34 points, right? It's like, oh man, but it moves too fast for 99% of the traders intraday.
Okay, and we're trying to help people not get caught in that trap. So if we're going to look at all these lines here, not everybody's going to be familiar with what's going on. I see some moving averages. I see some trend lines. How do you even read this bunch of lines here?
Okay, so this is easy for me because once I try to keep my charts, and a lot of people go, oh my God, that chart looks complicated. It's really not, because all I have down below is volume in the CCI, right? Which is just a little confirmation. So to me, I do multiple time frame analysis on TrendSpider, and this is what I like about TrendSpider. So usually I'll have it now, especially in today's market, I won't have the 15. I'll do multi-time frame analysis on the 2 hour. Okay. So to me, there's the 2 hours, right? The 15 makes it a lot more congested. Now, what I'm looking for is I'm looking how far away we are from the 50 moving average. average, right? So here's the 50. The 50 is my bold line, okay?
Okay.
So, I mean, look how extended we are. We're so extended from the 50. We're so extended from the 20, and we've got the 8 moving average on the 2 right here. So what I'm looking for are things to be kind of like the rubber band effect, right? Is that I'm using the 50 as kind of my mean. Above the 50 is long, below the 50 is short. And when we're really extended above or really extended below, that's when I'm looking for my reversals.
Yeah. Okay.
So my moving averages that I use the 8, I use the 20, I use the 50, I've got the 100, and I've got the 200 in there. But really, in this type of market, I'm really looking at the 8, the 20, and the 50.
Got it. Okay. Very good. You've got an interesting watch list there. I see, well, we talked about Tesla up there. I see Delta Airlines, Starbucks, Nike, Tilray. Okay. Yeah. Are these some of your favorites that you trade regularly? Are you making money on most of these?
Well, gold I just found the other day and made. It was interesting. I caught gold on a downswing in the morning, and I trailed it up $1, and I realized that was the easiest trail up I've ever done because it didn't herky jerk at all. It was not like, how like if you're in the if you're in the SPY, and this, and you're trailing it up, you could be 75 cents up and thinking you're in easy street, and you're literally 3 seconds later you're back to break even again.
Yeah. And
at that point you panic because you don't know what to do.
Right.
So I kind of looked at this Barrick Gold and I was like, wow, I really like the way it trades. So I did Tilray today because Tilray was 1 to 2 cent spread, really simple trader, gave you plenty of time, and I caught one of these moves. Oh, so I caught the move coming back. Where did I catch it? I caught it right here. So it was kind of consolidating. It's hard to blow it up here. So it was kind of consolidating at the 20, and it was above the VWAP, and it was above the 50, and it was above the 100, and it was above the trend line, and it was above the 8. It was above everything. Yeah. So I watched this consolidation, and I put a level in there, and I think I got it right at 732, and I caught this pop right here to like 750, 760. I didn't get all of it. I just got a quick little move. I had a lot of shares, so I got a quick little move, and then it went way up after that. So I was like, all right, I missed a lot of it. And then there was another move I got later on was right here, right when it came into the 50, retested the 50, and I got the move off the 50, and I got that final kind of pop up.
Okay. Very good. So you want to take a look at some other stocks here. So that was Tilray.
But I want to emphasize, once again, the risk mitigation, right?
Yeah.
So if you're watching a Tilray, and this is where I think people want to, something you taught me, David, which is really important, is base hits are better than home runs.
Yeah.
Right. You might hit a home run in the SPY, but it will lure you in. You might have been the guy, and you always hear that story, the guy that bought Boeing at 92, and now he just sold it today for 180, right? And he made $100,000, and he's really, really happy. But that gives you this psychological feeling of, wow, man, I'm a baller. Yeah. When, I don't need to play these little stocks. But the thing is, look at the risk factor. I mean, look at Tilray basing right here. So you've got an entry of 730, and you got a low here of $7. You got 30 cents of risk. So if you do 2,000 shares, you have $600 of risk. If you do 1,000 shares, you got $300 of risk. If you do 500 shares, you got $150 of risk. And your upside is, look at your upside. This thing made almost a $2.30 move. Yeah. I mean, you have so much, and you're going to survive. And that's something that I think a lot of people don't get, is they're not surviving because let's go to Boeing. Okay, here we go. Here, let's go get lured into Boeing. Look at these candles, and then let's just look at this. So here you are, you're playing Boeing, and you think to yourself, oh man, I just got to go long right here, 183.01, man. Look at the level, right? So you get spiked up, and you get to 184.30, and you're like, no, Boeing's can run. It can run. And then look what happens. The minute it hit 184.23, literally, 10, 15 minutes later, it's a low 176.64, and you're sitting there literally staring at the computer screen, not wondering what happened.
Yeah.
What
Yep.
happened?
And so it sounds like you have a defined exit strategy, whether it goes down or up, whether it goes in your favor or not. How could somebody better define, in your opinion, an exit strategy? First, if it goes against them, and then if it goes the way they want it to.
All right, let's go to Delta, because there was a Delta trade that I didn't take this afternoon, because here we go. It's right here. Okay. So one of my favorite plays is something you and I have talked about a lot, right? So we've right here, it was in an uptrend, and now we got the moving average crossover, the 8's crossed over the 20. So it's alerting you, all right, something's going on. Here's the 50, cracks through the 50. A lot of people will look at this and say to themselves, oh shit, I missed this trade. Oh no, I missed it, when in reality, the retest is coming. Here's the retest, goes right into the 50. Now look at our risk factor, right? This bar is your entry bar right here. It's 34.89 by 34.60. You got 29 cents of risk, right? Okay, 29. So you're going to enter at 50. It consolidates for a while, for a couple of minutes. So you got plenty of chances to enter. And literally from 34.59, your entry, you could have ridden it all the way down all day, because not once did it cross the 50 ever again. It never closed above the 50 until the very, very end of the day, and it closed at 31.70, and there was a $3 move. Even if you use the 20 to take you out, and the first green candle to close above the 20 was right here and happened to have been, a tail candle, so you probably would have stayed in, right, because it bounced off the 50. But look at the amount, your risk to reward. You've got 29 cents of risk. All you're going to lose is 29 cents, and you have all this downside. This downside is just an endless down, because the airline stocks, and this is what I've been following, the airline stocks, they had their relief rally. Now they're starting to reverse a little bit, I noticed this afternoon. Mm-hmm. While the SPY was still going up, the airline stocks were giving back.
Yeah.
So there's such minimal risk, 29 cents, and you could have stayed in this the whole day to make almost $3. What is that, 10 to 1 on your money?
Yeah. You could literally lose multiple times consecutively with bets like that and still come out ahead. You could be wrong more than you're right, and you'll still be doing well over time. Not necessarily with every trade. You're still going to have some bad days, though, aren't you? Bad weeks and months, even.
Oh, yeah. I mean, my bad days, and I write this down, and I'm very, what I call a blow-up day, I'll lose like $800-900, and it has nothing to do with technicals. It has to do with, I call it mentally, I lose my mental edge that day. I self-destruct. I get emotional.
Yeah.
I get frustrated. I realize, and I write this down, I realize there's underlying factors. And usually what happens, it's a really interesting process, and I've got no problem sharing it, because I think a lot of people don't ever share it. They always come to my chat room and watch me make money, right? But they never talk about like their emotionally self-destructive days. And some of the people I've learned from actually told me about it. You're going to have a day where you lose so much more money than you thought. All of a sudden, you're making money. You lose $100 one day, you're fine, you're doing fine. Then all of a sudden you have a blowout day. And I've learned, David, that these blowout days come from what I call emotional combustion. You're feeling the coronavirus. You're looking at your retirement account and realizing, oh my God, what am I going to do? Right? You didn't take your first 2 or 3 trades of the day, and they happen to hit home runs. And then what you do, it's not even revenge trading. It's emotional trading. All of a sudden you up your share size because you're pissed off at yourself. You're angry, right? You go to a stock that and then you hear something in a chat room, because that's why I think a lot of chat rooms are just not good for people, right? And all of a sudden you go, oh my God, I'm going to do this trade. And you do the trade, and then you're in it, and you're green at first, because this is the pattern, because I've realized I've done this, right? You're green at first, you got a lot of shares, you're up about $180, and you're like, I'm going to hold. I'm going to hold this one, right? And all of a sudden you're down 180. And at that moment, you're like, well, I was up 180 and now I'm down 180. It's just gyrating. But yet the candles don't really look healthy. And then all of a sudden you're down $500 and you realize, wow, I didn't put my stop loss in. As a matter of fact, I didn't even mitigate my risk because I got emotionally frustrated. And I think that's the biggest thing. And that's something that I'm trying, and I've told you this, you and I have done sessions on this. I'm trying to learn that. And I think a lot of people, they don't want to talk about that part.
Yeah.
And as human beings, we're emotionally driven. And when that happens to me, I have to take a deep breath and say to myself, I can't believe that I just did this.
Right.
And I'll go and I'll work out and I'll be fine. Because to me, money is energy and I'll make it back. And it's just part of learning and it's a lesson. And I'll wake up the next morning and I'll take my trade the next day. And usually I'm green the next day. So I get past it, but people need to realize that if you don't take your first couple of trades, it's okay.
Right.
As long as you don't try to make up what you thought you lost. And that's what I will tend to do. I will try to make up what I thought I lost instead of waiting for this beautiful Delta trade. Like I would have missed Delta running this morning, and then I would have tried to take a couple of Delta bad trades instead of waiting for what I always say, what comes up must come down. And this Delta trade at the end of the day was absolutely amazing. And it happened right at the perfect time because it happened right when people weren't paying attention, right at 9:22 in the morning. It's like all of a sudden it just decided to do that. And I'm starting to realize that if I take a deep, deep breath and I don't take the dumb things, I've got all my ammunition for what comes my way and fits what I think is going to happen that day or what I see happening that day.
Interesting. Okay. It is fascinating. Both of my parents are therapists, interestingly enough. And so when I coach people, it's almost more emotional therapy and addressing those things than a lot of other, financial coaches that people go to. Sometimes they sound more like Yoda, or so I've been told, than, a technical trader. But that's okay. I think that solves 90% of the problems more than some technical issue. As far as... So you got your watch list on TrendSpider over there, which is on the right side of the screen, and it allows you to put up as many indicators as you want. If somebody just wanted to have fewer indicators, declutter, as I'm constantly telling people to do, coaching clients, I'm constantly telling them to declutter. If they wanted to take off half of that stuff on the screen, if you could only have, let's say, a couple of indicators, what would they be and how would you use them?
Okay. I mean, that's really easy. So let's get rid of multi-time frame analysis.
Okay.
There. Look how much cleaner that is, right?
Yeah.
So now you got no multi-time frame analysis. Now you're just going on the 2-minute chart. Okay. You do not know, you don't know what the 5-minute, you don't know what the 5-minute indicators are doing. You don't know anything. So you can literally get rid of that. Now let's get rid of this and just do price action. Oops. Let's go back there.
What's good about the platform is you could always put it back very easily.
All right. So, I mean, there are a lot of people that just trade like this. This is something that, you've done some fantastic. I mean, you guys got to check out David's support and resistance videos. I mean, you really want to be a pure trader, just draw your own lines. I mean, we could have done this. We could go to the line drawing right here, and then we could see it going like this, and we could draw a line in right there at 35.05, right?
Sure. Okay.
Forget about indicators. Forget about everything, and just take a look at what's going on and just count it. Look at this. It came back up to what 34.93. It's close enough to 35.05, right? And then came down, and then look, we can draw another level here and say to ourselves, I mean, there's another way to trade, right? Draw another level here and say, all right, if it cracks 33.65, I'm out. We can draw another level here because we got another pivot and go up 34, 33, 33. All right, let's draw another level here. 32.93. All right, look at this other level we got here floating around here. 32.08, and it never touched any of them. I mean, so you could just do pure support and resistance trading and not even bother with moving averages.
Yeah.
I mean, you don't need a moving average to know that this is moving down.
That's true. Yeah, that's interesting. And there are people who swear by this method. They're called price action traders, as opposed to people who use technical indicators. I like both. There's no right or wrong here. And it's interesting how you can use these levels, the swing highs, or in the case of Delta Airlines lately, the swing lows. And you could put horizontal lines there. And those are your levels. And you ask yourself, okay, is it above this level? Is it below it? I noticed that the 32 level, I mean, it hit its head against it recently, about 3 candles ago. So I believe that's the market trying to tell us something, if I'm interpreting this correctly.
Oh yeah, David. I mean, it's funny. I've never done this. And it's funny to look at this because it's without the lines.
Yeah. Does it feel different and kind of weird?
Honestly, on this chart, I would probably only throw on a 20 and a 50, and that's it.
Okay.
I wouldn't even want anything else. 50, so then I know the trend is down. 50 above is long, 50 below is down. 50 below is short. But I could see the 20 and the 50 moving average. I could tell you where the 20 moving average is. I mean, I don't even need the 20 moving average is here. It's here, and it's probably right around here.
Yeah.
I mean, without even looking at it, I can tell you where it is. Let's see if I'm right.
If you look at enough 20-period moving averages, you start to predict where it probably is.
Yep, there it is.
Take a look. Yeah.
Right there. I was right around there. I was right around there. So, I mean, this is really interesting to do this because I think let's turn it off again. Hold on.
I think that would be a good exercise for just about anybody who does use a lot of indicators. Try decluttering, even to this point. Try another method, another outlook or way of doing things, which is maybe try no indicators at all, pure price action trading, or do what you're doing right now, which is declutter and then maybe add back a couple of things and simplify. And, you've talked about people who have analysis paralysis. I've stolen that phrase from you more than a few times. And this is one way to get rid of that. And this could be a method in and of itself. I really like this, actually.
I do, too. I like it a lot. And let's add something. Let's add a little twist. If you want an indicator, let's just go to Heiken Aishi and see the trend.
Yeah.
I mean, so here's pure price action. A lot of people don't trade with this way, right? But I mean, if you can see, this is pure. I mean, look at this. This is just red, 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 red. I mean, it's just constant red going down. Yeah. So if you want to put a trend in the middle of it, just take a look at the Heiken Aishi candles. And I know people, David, are like, oh, man, I bet this won't work for let's just do another chart just to show people. It works for every single chart, okay?
Okay.
Just because I know, how do you get rid of this thing? That's the next question. All right. Yeah. How do I get rid of the line? Horizontal line, show. Great. Now I'm going to be stuck on horizontal lines. All right, let's go to Starbucks.
There we go.
Okay. All right. So look at that. That's some crazy, crazy, crazy price action on Starbucks, right? Or is it? Technically, is it really crazy price action? Well, not necessarily, because let's take a look. Let's do our little lines, right? So let's go here, roughly 71.57. Okay. And let's go another swing high right there. I mean, I'm seeing already, hold on. Let's go right here. Okay. And then let's go, that's a poke through, then let's go right here.
And as you can see, we're including the wicks in our levels here, not just the bodies of the candles.
I mean, I don't need a moving average to see that this price is in a channel, and I could have spent my afternoon shorting it.
Yeah.
I mean, it's not hard to see that it topped out and it never got back up. Once it failed at 71.28, I don't care about this poke through right here. I mean, that poke through is what, 11 cents on a $71 stock. I mean, look at that. Look at that high tail.
Yeah.
And then we went down right from there, all the way past, the bottom here.
Interesting. Yeah.
I mean, it's interesting. It's interesting to do this because you just have I mean, look at it. Then we got it. Then we got a hammer right here. And then look, we took it all the way to G. Look, 70.73. I mean, we literally took it to, let's see, do we even have a price level of that before? We might have had a price level of that earlier today. But you can see the range. You can see the beautiful trading range it was in, with no indicators. And this is interesting, David, because I've never looked at it, because I've always had swing highs, swing lows, and I've had this stuff put in. But when you have the moving averages, you don't see the channels to trade. Like, I would have not, at Starbucks, I would have looked at this. I mean, let's look at the difference. Watch. There's no way in the world. Look at that. It's like,
so the theme here is we're getting in our own way sometimes. So we have to get out of our own way, so to speak. Yeah, I would just sit there all day long and stare at this, and then at the end of the day, I would realize I could have made money, and I wouldn't have even taken those trades, but now, wait a second, look, all right, we got a green candle. Look at our risk. Our risk is nothing. Our risk is, what is that, 62, and if we enter here, you got a lot of risk on that. You got about 38 cents of risk, but well, you've definitely made more than one. You've definitely made more than 3 or 4 to 1 on that, right? I should say so. And so it's interesting. You're using these levels as your exit strategy, and you're using it as your profit target as well. So it's not a defined formula every time, because some people use a 2-to-1 ratio, 3-to-1 ratio, but you're letting the chart tell you what it wants and what the market is, how high it's willing to go, how low it's willing to go. It's not set in stone. It's always changing. It's always in flux. But this is an interesting way. You can kind of get a sense of this. And this is something you want to start out doing with virtual or demo trading. This is not something you want to try out with a lot of money the first time. That's for sure.
No, but it's interesting, David, because look how clearly defined the double top is at 71.28, and look how clearly defined the double bottom is at 69.62, give or take 20 cents, right?
Yeah.
But you have, like, you're gonna miss this. I mean, this is so funny. This is groundbreaking stuff, because I have never looked at it this way, and this is what I love about. For all you guys that are thinking about trading and working with somebody, David's amazing at this, because he not only understands psychology, but he gives you the opportunity, because look at the way he kind of pushed me into this. Like, hey, what would somebody do if we took off these moving averages? Yeah. He's getting you to look at things different. And that's what David will do. David will get you to look at things a lot different, and you'll see the market, because the market is not intimidating when you declutter it. And this, to me, my God, I could just sit back, fold my arms like this, and go, all right, I'm buying Starbucks at 69.62 every single time. And every single time I bought it, I would have made money.
Yeah. Yep.
Every time. And every time I shorted it at 71.28, I would have made money. 1 time, 2 times, and then at 70.73, I could have shorted it because because that candle alone is telling me that, the buyers pushed it up and the sellers came back and pushed it down. So This is so much easier to me. I may actually start trading this way than all those goofy moving averages, because it's just so clear.
It's worth trying. Again, with demo trading or small amounts of money, you can test out more than one strategy or outlook at a time, and see which one works better and which one feels better to you to do it. Not that these are always going to feel good. Trading should be a little bit uncomfortable sometimes if you're doing it right. But I'm glad that we were able to find a different possibility. And when I do coach people, I oftentimes ask a lot more questions than make statements. I found that, again, maybe that's my therapists for parents. Maybe that's my my upbringing. But I found that you really can help people to change a lot more by asking questions to get people to figure things out for themselves. I have a master's degree in education, and they call that constructivism. I'm sure you know that because you're a life coach, where people where as a coach you encourage people to construct their own conclusions rather than front loading the conclusion to them, because then people don't mentally accept them until they construct knowledge for themselves. And so this is really productive, I think.
What is it? It's something interesting, David. When I'm coaching people, I tell people all the time, see it, say it, listen, respond.
Yeah.
because I'm a communication coach, teaching men how to connect better with women, teaching women how to connect better with men, but teaching people how to connect better with others, right? And I always tell people, see it, say it. And it's interesting. On one of my screens here, I have a see it, trade it. And you can't trade until you see it. And whatever it is, and this is something, that. I mean, you've done so many videos and they're all great. You've broken down indicators and everything. And there's something that, really, this is what I love about your advice, is that there's a system for everybody.
Yeah.
You got to find it. You might be an RSI trader. You might be a stochastic trader. You might be a 1 minute guy. You might be a 15-minute guy. You might be a swing trader guy. You might be a 1 minute chart, 2 minute chart. I mean, there's always something, that, that works, because that's the beauty of the market, is that everything works, but it's finding what and this is the way in life that I look at too. Everything works in life. You got to just find what works for you.
Yeah.
And when you declutter your mind, no matter what you're doing in life, to me, like, I just cannot believe, staring at this, how simple it is, because nothing is compressed anymore. Because when you put the moving averages in, it's compression. It takes up all this room, right? It's like we got to make everything smaller, and it doesn't look right. And then the candles look scary, and it's like I'm using my hands that way. And it's just so clearly defined right now that I'm excited to wake up tomorrow, because I now understand, like, wow, look at the trading channel. This, a bot is going from 69.62 to 71.28, and then going down, and then going up, and then going down. And you can start to see the way the algorithms are playing, and the electronic traders are trading it. And
Yep. It makes perfect sense. I like the idea of decluttering. I'm so glad you're excited to test this out. That is very, very cool. I often start people out who are beginners just having them draw boxes, which is what Nick Darvis used to do many, many years ago. He's one of the classic traders. He would draw boxes on the screen. Nowadays, we talk about channels instead, but it's just a very simple way. How high does this thing typically go in the past? How low does it typically go in the past? And draw a box, not a fancy box, not even a slanty box. It's got to be vertical, like the lines you drew, and just draw a box around it. And eventually it will leave that box, but until it does, that's the box, if that makes sense.
It does. And it's just so, and it's so much prettier because you can see the noise.
Yeah.
You can see where, once again, levels are just so, it's everything. I mean, levels are everything. Price is everything. And really, that's what we're really trading. We've only thrown in, and I think that's the thing with people. It's like, everybody wants to know the secret, the secret magical indicator, the secret thing to say to somebody, the secret way to make money in a business. And in reality, if you're talking to human beings, the key is to listen, and the key is to respond. If you're trading stocks, all you're trying to do is listen and respond to the action that's being shown right in front of you. And I think we complicate things so much because the stock market has a reputation. It's funny. I tell people all the time, the stock market's the hottest girl at the bar that nobody wants to ever approach, but yet is actually the nicest person once you get to know them, right? Yeah. It's like this, it's so intimidating. And I think that's the way to really understand, that you got to not be intimidated by something to do it, and you have to not chase it, because you taught me this really, really well. You can make a lot of money just trading Twitter, just trading a simple, easy stock. Why go for something that is difficult and challenging when you can just enjoy yourself and just watch for your channels and play your channels all day long?
And one final thought, you've taught many people that men don't listen. Men are terrible at listening. And I've noticed that when I have coached ladies, and this is a compliment to you ladies listening to this, ladies tend to learn faster when it comes to trading. Because women actually are great listeners on the whole. I'm not trying to generalize, but and also people who don't have preconceived notions learn quicker when it comes to trading. Whereas men who can be very egotistical and terrible listeners in many cases, they come in with their preconceived notions, and I'm not even sure why they're coming to me, maybe just to confirm what they already thought. And then they don't learn very quickly. So again, decluttering, you just mentioned listening to what the market's telling you. If that means you have to draw a box or some horizontal lines to say, okay, this is how far Starbucks is willing to go until proven otherwise. This is how high it's willing to go until proven otherwise. Until I have a reason to not believe this thesis anymore, this is my box. This is the upper resistance line, the lower support line. Now, perhaps at some point, the market, which is a big auction house, will tell me, okay, we're done with this box. We're going to prove it, we're going to invalidate it. But until then, it's valid. Until proven otherwise, the channel's valid, and we can see that it's still in the channel. And so I'm still going to believe that 69.62 is a good level. Even though some of those wicks made me think, like this most recent wick, that gigantic one, said, uh-oh, maybe it's invalidating. Nope, right back in. So we're looking for where did it close, not just where's the wick, okay? Just because it pokes its head below something or above something doesn't mean it's invalidated. Not yet. So anyway, just a final thought. Do you have any final thoughts to throw out there?
I do.
Before I tell people to check out davidwygant.com, by the way.
I do, and I got one final thought here, which is really, really interesting, and I want people to understand this, because it was an aha moment when you were giving me that wonderful advice. I want all of you to rewind 1 minute and listen to what David said, the box, until it's proven otherwise. Even if we got in right here, let's say we got in right here at 69.91, and we rode it up to 70.46, and we thought it could get back up to 70.28, and it reverses. It doesn't matter, because break even would have been put in, and you would have just scratched on the trade. And here, it gave you another opportunity right here at 69.98, and guess what it did? On the second time, it got back up to 71.28, your target. Mm-hmm. So when you are putting things in a box, you're actually being protected. Like, you can almost see trading insurance sitting here. It's not as scary. So, David, I so appreciate being on your show. And
no problem.
If anybody wants to reach me, it's davidwygant.com, spelled Wygant. I've got lots of free time because I'm a highly social person being trapped in my house right now. So there's a limit to the amount of time that I can sit inside my house. So I'm up for anybody who's got any life issues or coaching that you'd like to do, or relationship problems, and just, preparing, because, coronavirus isn't going to last forever, and eventually we're going to be let out again, and the same problems that we had before are going to, literally come back at us. So take this time to really heal and figure out a game plan for how you want your life to be in the future.
Yep. And when your stock is quarantined in a box, play the box.
Absolutely.
Very good. David Wygant, a coach in many areas, life coach, relationship coach, and up and coming, financial guy in the making. We're going to see where this goes. So we're going to get you back here, I'm sure, in a few months to see if your theories, if these ideas play out, and we'll see where the market is. So thank you, David Wygant, for coming on Looking at the Markets.
Thank you, David. I appreciate the time.